Tackle today, Justice Brothers from Tackle Trading, bringing you all the charts, analysis, and news so you can be informed in just a few minutes in your trading decisions on any given day. Bank earnings come out, producer inflationary data, kind of a nothing burger. Markets in a very good mood on this Friday to close out the week. We're going to break it all down, Matt, on the S&P 500, the center of the investing universe. You're seeing a continuation of the breakout today. It's a healthy look going into the weekend.
Yeah, it certainly is. And before we get into the technical breakdown here, remember we have the AI gold rush, the next big investment wave. We're going into phase two of that build out. We're going to be doing a webinar here on October 16th, 7 p.m. Eastern Standard, 4 p.m. Pacific. Come join me. You can get access to the AI gold rush watch list as well. It's going to have a very fun event and inform our community and others on the AI marketplace and the opportunities that exist within. And so you can check that out just by registering at the link in the description below. Now, regarding the S&P 500 here, you're absolutely right. We got the breakout on Wednesday with that confirmation close on Wednesday. Thursday, a little bit of slowing momentum inside candle. Nothing to see here, just kind of hovering up against that top end of the resistance level from an intraday. And then good news on the bank earnings here today. And I did take the PPI report as a positive. And so you saw a little bit of that continuation flare here today. So broke out on Wednesday, and nothing to really update other than just some continuation technical analysis here today. When you're looking at the S&P 500, just taking a quick peek at the other indexes very quickly. RSP attempting to break out following a good start by the banks in the kickoff to earnings season. It's attempting to break out of that top shelf at about 180. Keep an eye on that 180 handle. You're looking at some pretty decent development, quite frankly, on the Qs over the last 3 days, really dialing in a little bit of a breakout in and of themselves over the last 3 days, like the consolidation there as well. And IWM kind of forming a little bit of what we call a king's bed pattern at the lower end of the retracement. You definitely want to see better development in terms of consolidation. The deeper retracement you go, you're starting to get that out of IWM, but it is certainly lagging a little bit of the price response we've seen over the course of the last week and a half in the general market, though, as well. So an improving condition in IWM, but certainly still a technically challenging environment for the small caps.
Yeah, listen, that S&P chart has made me very happy all week in its development. So have the gold and silver charts. We'll look at them here in a second. Before we get to that, the economic data that came out this morning was kind of a nothing burger. I mean, you did not see, I always check rate cut odds, like after economic data comes out to see
It's
what,
the most important part of the
like
entire
how is the rate market interpreting the data? Like they barely budged, like literally one of the smallest increase. Mixed report, month over month numbers dovish, the year over year numbers a little hot, consumer sentiment a little decline. The totality of the data, the rate cut market said, yeah, like didn't do anything on it, Matt.
Yeah, when you're looking at the PPI report today, I actually take it as a positive here today. I know the data was mixed on the year over year and the month over month numbers, but at the end of the day, expectations were a little bit down coming into it, so we saw a little bit of a bump up on those year over year numbers. But in general, I don't think anybody's going to scoff too much at a 1.8% year over year number from a producer's price index, especially when the month over month came in at zero. And so I did take it as a positive, given the fact that I took the CPI report a little bit as a negative yesterday. And so you had a little bit of a negative on the inflationary side, but the producer side does look fairly decent as of right now. In general, there's nothing that happened on the CPI or the PPI report this week that is going to change the way the Fed sees the monetary environment. And so this is what we kind of expected as we go into rate cutting cycles, is that the inflationary reports take a back seat to the economic reports. And that's exactly what we're seeing play out.
Yeah, absolutely, Matt. Bank earnings. Let's not bury the lead here. They came out, earnings season upon us. I looked at the earnings calendar next week, and we'll talk about this in the Tackle Trading newsletter today. Lots and lots of companies, right? But official kickstart today. How'd the banks do?
Yeah, I thought the banks did okay here today. Not great, but I thought they did okay. And it's definitely a good enough start to kickstart to the earnings season. And we always would rather see an upward movement in price on the kickstart to earnings season than a downward movement in price. So I would say it's a pretty decent start to earnings here. In general, when you're looking at the banks in collectively here today, you got a 9% beat on JP Morgan, you got a 10%, 11% beat on BlackRock, and you got about a 19% beat against EPS on Wells Fargo. All three of those are well above what the average beat rate is. Now, some of that beat percentage here today is based on those expectations coming down over the course of the last 6 weeks or so. Remember, last quarter, we didn't see massive revisions to the downside as we were going into earnings season. This time we did. We saw a normal downgrading of the earnings expectations as we were coming into earnings season. And so a little bit of an easier bar to beat here.
And Matt, this was a huge point you made in the Trading Justice podcast this last week.
Well, I think that's why we're seeing 3, 4, 5% movements to the upside, is because of the expectation had dampened down the price response. And so when you overcome that, you simply you have a little bit of an alleviation event to a certain extent. And so EPS across the board were pretty decent. Revenue was also I don't want to say revenue was as good as the EPS beats, but there wasn't nothing really to get too concerned about on the revenue side. Jamie Dimon did his best to talk down the impact of stock buyback programs, but the shares still were going up. And so you had good EPS, pretty decent on the revenue side of the equation. A couple little points here. Net interest income out of JP Morgan was a very good positive. Out of BlackRock, they hit a record asset at 11.5 trillion under management. And Wells Fargo got a little bit of a love despite 11% decline in net interest. Remember, that was a positive for JP Morgan. It was not a positive for Wells Fargo, but Wells Fargo's a little bit of a different beast, given the fact that there's more fundamental concern. There's more problems within Wells Fargo. And so there was a little bit of an alleviation event there as well. When you are looking at these three banks from a technical perspective, JP Morgan, a little bit of a gap up, not a lot of gap up here, a little bit of a gap up, and then it's running right into that overhead resistance level. 225 is that resistance level, and you'd like to see that get dialed in, no doubt about it. From a trader's perspective, obviously investors are happy on these bank numbers with price going up and beats across the board on both EPS and revenue. On Wells Fargo, coming from a little bit of a lower point, and remember, JP Morgan in a good bullish uptrend. Wells Fargo has not been. It has not achieved a all-time high pricing ever since we went through May of this year. Now you're starting to talk about a 62.5 handle. Obviously, you would like to see that get dialed in from a multiple time frame perspective as well. And if you don't know what that means, come over to Tackle Trading and we'll teach you all about that from a technical perspective. And then Larry Fink's BlackRock, again, good trend going into earnings, a little bit of consolidation in front of earnings, and then a breakout following earnings. You'd like to see that get dialed in as well. But BlackRock, well, you need a split. We'll just say that out loud. You need a split as well, but good price response coming out of BlackRock as well there, Chucky.
Yes, Matt is a very, very skilled and experienced earnings analyzer. Look forward to him in the Traders Lounge and here in the Tackle today in the coming weeks, break down the key earnings results. Commodities also getting a bid in precious metals, copper, we talked about this in the Traders Lounge the last couple of days, how important that intraday support level was on precious metals that was building. We're seeing a little lift off from it. Dollar feels like it's about ready to take a break, Matt. Like
it needs to, and that's why I think you want to bring up the dollar here, is because we are seeing a little bit of slowing momentum. You had one really good day this week in the dollar. Outside of that, it was slowing momentum for 4 out of the 5 days in the dollar. So Wednesday, real big up in the dollar, but outside of that, a little bit of slowing down, and you are starting to see a little bit of U-shape here. There's no doubt about that. Still momentum condition, still bullish, but at the end of the day, you are starting to come in a little bit closer to those overhead resistance levels. In fact, that strong move on Wednesday kind of forced that wick all the way up to that 20 weekly, which is a very strong level of resistance. So not surprised to see a little bit of the turnover here, but still a little bit of concern on the dollar as we do navigate the commodity landscape. Commodities put in an intraday bottom over the last 2 days. We dialed that in both in the tackle today, but in great detail in our traders lounge for the pro members that we do every single day. And so we were all over this one on the intraday side of the equation. Now you're seeing a little bit of liftoff on that gold getting back up above the 9 EMA. That's a pretty decent, healthy look. Silver just trying to fight back up, quite frankly, fighting off that volatility. It's going to have to clean it up a little bit, but it didn't show further downward pressure in price following that big down on Tuesday. And so you like what you see in the development of silver, but you still got a little bit of ways to go. Copper starting to form a little bit of that low point as well in the retracement. And that's how we are seeing these as bullish retracements, because we're looking at increases in support. And then on the crude oil side, Mark, interesting. You're starting to see a little bit of that.
It doesn't take days off. Like, come on, we don't have an $8 million range.
No, the volatility is still here. There's no doubt about that. The volatility is still here, and crude oil could become a problem for the breakout of the market if that volatility doesn't decline. One thing, we did see an increase in support this week in crude oil, and now you're right back up above the 200-day moving average with an increase in support. Not sure what you can do with it on the short-term side of the equation. The volatility is real, and it happens very quick on the intraday side of the equation. So crude oil still needs to simmer down and settle in.
Yeah, absolutely. Listen, we got a lot to talk about in the Tackle Trading newsletter. It is a world-class newsletter. It is something that you do not want to miss out on in your analyzing the market. It's released every Friday, and you get it as part of a Tackle Trading Pro membership. And go sign up for that 15 free trial, and you can get it today. Go to tackletrading.com.